The company Thor Industries is a global leader in the RV sector. They have about 40% market share in towables and about 50% market share in motorized RVs. And last week on the Punchcard Investing channel, we dedicated a full kind of hour or so long episode to talking about all things RVs and talking about that industry from an investment perspective. And just this week, Thor Industries, the biggest player in that market, has come out and reported another quarter of record earnings. So I want to go through some of the results from Thor's business and also some of the reasons why there potentially might be some headwinds moving forward. And it's a really interesting case study, I think, of how to kind of analyze a more cyclical business. I think a lot of people are used to doing a discounted cash flow and modeling forward future cash flows on companies like Apple or Google or Amazon, where the cash flows tend to be fairly consistently growing, whereas Thor and their main sort of other public competitor, Winnebago, is more of a cyclical business. They go through highs and lows, and right now they're in a very, very serious high, and we need to figure out kind of what the future might look like moving forward. So if you enjoyed this video, be sure to hit like and also subscribe to the channel if you're new here, and I apologize in advance because there's lots of thunder and lightning going on around me, so if you hear any weird noises or see any odd flashes, that's what that is. But without further ado, let's get straight into the highlights from Thor's latest earnings release. Alright, so firstly let's talk about some of the high-level operating results out of Thor. So these are the sort of the bullet points that came out with their main press release around their earnings, and it said net sales for the third quarter were $4.66 billion, an increase of 34.6% as compared to the third quarter of fiscal 2021. Consolidated gross profit margin for the third quarter was 17.3%, a 270 basis point improvement over the comparable prior year period. Earnings per share for the third quarter was $6.32 per diluted share, an increase of 91% as compared to $3.29 per diluted share in the same period of the prior fiscal year. Consolidated RV backlog as of April 30th, 2022 was $13.88 billion. During the third quarter, the company repurchased approximately $40 million of common stock under its $250 million share repurchase program. During the third quarter, the company made principal payments of approximately $124.6 million on its term loan. Subsequent to the end of the third fiscal quarter, the company made additional principal payments of approximately $140.5 million on the term loan. So, upon first impressions, a spectacular quarter out of Thor Industries, and if we look at some of these sort of updated valuations for Thor, incorporating those new numbers, Thor is now trading at a price to earnings of about 3.9, so exceptionally low on that front. That basically implies that people think Thor is very likely to have a decrease in earnings moving forward. Otherwise, a company that's just grown earnings at 90% year over year wouldn't typically trade at a PE of 3.9. And if you sort of try and normalize for this fluctuation in earnings that tends to happen at Thor and look at something like a price to book ratio, we are actually also down near some of the lowest valuations we've actually ever seen for Thor. And this isn't a recommendation or anything, do your own work, but I think it's an interesting case study. Thor is now trading at about 1.2 times book, which is only a fraction higher than where it bottomed out in March 2020 at about 1 times book, and that compares to the average price to book of about 2.7 over the past 10 years. And if we put some of these earnings into sort of the long-term trend for Thor, which you'll see here, we can see that again Thor has gone through big ups and downs, but generally there has been growth if you kind of even out for those bumps in the ride. And on the chart here you will see that the 2021 financial year had a little over $12 billion in revenue, and you'll see the kind of subsequent gross profit and earnings numbers out of that. And for the last 12 months, which are actually not seen on the graph here, so that incorporates some of the 2021 financial year and also the portion of the 2022 financial year that we've had so far. Thor is now up to a last 12 months revenue of about 16 billion. So we have a business that really is firing on all cylinders. We've got a long-term track record of growth. We've got them paying down debt. We've got them buying back shares, yet the stock is trading at kind of all-time low valuations, essentially. So I want to walk through some of the more negative things happening at Thor, just to try and give some perspective on why that might be. And hopefully this answers a few of kind of the key questions around Thor, because I think there is definitely some uncertainty moving forward. And I think there's some fairly rational reasons why people would be avoiding a stock like Thor Industries. Now, if you're a long-term holder and you're happy to hold a stock through those cycles, potentially you're less concerned about these things, but I think they are worth diving into. So again, if we look at some of the highlights on this slide here from Thor's latest earnings release, we see those net sales, gross margin, and earnings per share figures. The number that jumps out most significantly here for me is actually the gross margin of about 17.3%. The long-term gross margin target at Thor is 16%, and they are a very capital-intensive and relatively low-margin business. I will put up sort of the net profit margins on the screen here so that you can see what those numbers are. So if we have a 1 or 2% increase in gross margin, and that flows directly to that net profit margin, sort of small adjustments in those margins at the gross profit level can have a huge impact on the overall earnings for the business. So it's interesting to see that one come through, particularly when we have a lot of companies concerned about the cost of raw materials and so on. It seems that Thor is really not having a lot of trouble passing those extra costs on to consumers, and we're actually seeing expanding gross margins as opposed to contracting gross margins. Now, the key thing I really want to focus on here is the current sort of broader macro picture in the RV industry. And you have to remember that Thor is a wholesaler, so they basically produce the RVs, both towable and motorized. They sell them to the dealers, and the dealers then find the end customer and support the customer and getting into the RV lifestyle. So there are a couple of aspects of that that are really important to monitor. Firstly, Thor has an RV backlog, so these are basically orders that the dealers put in with Thor, and the RV backlog is still historically high, and although it's come down a fraction, we're still at about 13.88 billion, which I just said the last 12 months revenue for Thor is about 16 billion. So it's close to a year of orders, and they're kind of steadily working through that backlog. And interestingly, in watching an interview with the Forest River CEO, which is a fairly major RV brand actually owned by Warren Buffett's Berkshire Hathaway in the US, he actually had this to say about RV backlogs.
Are the dealer orders moderating as well?
Yes, absolutely. And so backlog in the RV industry is like fresh produce in a grocery store. It's only good for so long.
Yeah.
And so anybody that's out there bragging about their backlogs probably hasn't really purged their backlogs to be real.
And as a little bit of a counter to those comments, this is actually what Thor said in a Q&A document that they released alongside their earnings. When asked about their RV backlog, they said, "We remain committed to managing our backlog as we continue to have regular dialogue with our dealers to make sure the backlog is aligned with both our dealers' inventory needs and retail demand. Overall, backlog levels remain elevated compared to pre-pandemic levels as demand for RV product and enthusiasm for the RV lifestyle remains strong." So maybe RVs are like fresh produce, and I just actually watched another interview with the Thor CEO this morning talking about some of the orders in this backlog are over a year old now, and they're still sort of going and working very closely with the dealers to make sure they are still legitimate orders, and sure, some of the dealer preferences have changed in that time, but by and large the numbers reported are in his view still quite accurate for dealer demand for Thor products. Now, the other component of tracking sort of the relationship between the RV dealer and Thor as the wholesaler is basically dealer inventories. How many RVs do these dealers have on the lot? Obviously, if they've got no product to sell, they're likely to put in a lot more orders with Thor to try and fill their own inventories back up in order to have product to sell. And on the other side of the equation, if they have a lot of inventory and they have a lot of product available to sell, they're likely to put in far fewer orders with Thor. So right now we actually have a really interesting situation with those two things. So we've just come out of COVID. where we had basically historically low levels of dealer inventory. RV sales just went through the roof during COVID, and for that reason we had a very large backlog, so dealers put in huge amounts of orders, and now the inventory is starting to build back to a more normal level. So we have about 135,000 units as dealer inventory. That compares to only 75,000 units at the same time last year. And if we go right back to 2018, which is sort of peak dealer inventory, we were up at about 166,000 units. Now, it's worth noting there's some seasonality to these numbers. So the sort of summer selling season is really the key season for dealers. So that's when they try to have the most inventory. And that's sort of the period where we're kind of heading into now in the United States. But nonetheless, we have this interesting contrast of an inventory that's almost fully rebuilt with still a big backlog of orders. So Thor did comment on that a little bit in their press release, where they basically said that they want to remain disciplined in terms of not overproducing. And in an interview again that I watched with Bob Martin, the Thor CEO, this morning, he said they've actually already got some of their factories working 4 days a week and the like to make sure that they don't overproduce and cause issues in the sort of broader RV market. Not being as disciplined about that production is basically what went wrong in 2018. If you look at Thor's long-term earnings, you'll see there's a dip in the 2019 financial year. That was basically from overproducing in 2017 and 2018. So I think they seem to have learnt their lesson from that, but time will tell how that plays out over the next couple of years. And again, just to give you a bit more of the kind of full picture in terms of what's happening in the broader industry of RVs, Thor also put out some kind of market research data from the RV Industry Association, and they actually recently came out with a forecast for 2022 wholesale unit shipments, which of course Thor represents about 40 to 50% of that market, and they expect wholesale shipments for 2022 to come in at 549,900 units, which is oddly specific, but about 550,000. That compares to about 600,000 in 2021, and 550,000 by historic standards is still very, very strong. Again, I'll put up the long-term kind of wholesale numbers on the screen here so that you can see that. Now again, just to get a little more nuanced with the dealer inventory and backlog situation, Thor have a significant North American business. They also, as of the past couple of years after making an acquisition, have quite a significant European business since they acquired the Ewinheimer Group. So talking a little bit more about the European inventories, they did say independent RV dealer inventory levels of our European RV products are generally below pre-pandemic levels in various countries in which we serve. Within Germany, which accounts for approximately 60% of our European product sales, independent dealer inventories are significantly below historical stocking levels. And that was actually largely to do with some supply chain problems. So we have already kind of gone through the margins for Thor, and they're able to pass on a lot of these higher costs to the end customer. But they are still having a few issues, particularly in Europe, actually sourcing some of the parts that they need, in particular chassis, which are obviously quite a major component of a motorized RV product, which is about 80% of Thor sales in Europe. In the US, they are about 80% towable, so quite different markets there. But they said on the motorized side, chassis supply continues to be a constraint due to the ongoing chip shortage. As a result, we continue to experience reduced and inconsistent chassis deliveries. And again, if you kind of dive into some of the details of Thor's sort of segment breakouts that they do in their earnings slide deck, you do see that in the numbers. So even though overall Thor sales were up more than 30% for this quarter compared to the same quarter last year, pretty much all of that growth and more actually came from North America, because you had the European business kind of dragging things down a little bit. So net sales were actually down 19% in the European segment. Now, I just want to talk briefly about valuation for a business like Thor, because it can be a really tricky one to try and value, particularly if you're someone who likes to do discounted cash flows and, again, kind of project out steady cash flows out into the future. I think that can be quite challenging to do with Thor. You know, they're trading at like a PE of 3.9 or something at the moment. A couple of years ago, the price per share wasn't all that different, but they were trading at a PE of more like 30, and that's because they do have very volatile earnings. And I don't know if that's necessarily the best way to look at valuing a business like Thor. The way I'm starting to lean over time is to look at more of a price to book type ratio for Thor. You certainly do have to try and sort of normalize out these bumps on the road when you are analyzing a more cyclical business. And I think using a price to book combined with a long run return on equity type metric is probably the simplest way to do that. So if I look at some of those metrics for Thor, we currently have a price to book of about 1.2, and we have a 10-year average return on equity of about 19.3%. So using those numbers, I get to sort of a normalized earnings yield of about 16% on the current stock price. But again, whether the future looks brighter than the last 10 years or less bright than the last 10 years is something that you'll have to try and figure out for yourself. I think there's some generally very, very good tailwinds, and the sector generally has a very good long-term track record of growth. And we're seeing some capital allocation that I think makes sense at Thor. They're prioritizing kind of running the operations of their business, but then they are also focused on reducing debt. They pay a regular dividend, and increasingly they are looking to reduce the number of shares outstanding. So I hope you enjoyed that update on Thor Industries. Again, it's not intended to be a stock recommendation or anything like that, but I think it is a interesting business to follow, and hopefully gives you a nice case study of how I think about analyzing a more cyclical business. And I think it's a nice exercise to kind of work through in real time how some of the key aspects that drive the cyclicality with dealer inventory and order backlogs and supply chain shortages and COVID and countless other things, how they all kind of become intertwined and work together, and result in the numbers that Thor is able to produce. So like I say, I do hope you enjoyed the video. If you did, please hit like and also subscribe to the channel if you're new here. That's it from me for this one, and I'll see you in the next video. Cheers.